everyone, oh, how do you manage to lose that much weight? Tell me what your secret is. And I said, well, you know what? I'm kind of blessed. I'm lucky that being an alcoholic and addict means that it's a double-edged sword. As much as it can be all that negativity, for me, it's like flicking a switch. And when I decided I was going to lose weight, you know, my calorie intake went from thousands a day of, you wouldn't believe how many carbs I was getting into my mouth, to 700 or 800 calories a day, purely protein. And I ate that for 6 months and dropped, 6 stone. That's 40 kilos in 6 months, and now 50 kilos. And because I can flick that switch. Now, I appreciate most people can't do that.
Hey everyone, welcome back to the Market Stalkers channel. This is another episode of my series Drink with Traders, but today I'm having coffee with Steve Miley, one of the founders of Trade Day and the man behind MarketChartist.com. Steve, welcome back.
Hey, how you doing? Good to see you. Well, thanks for having me back.
We're filming this on a Thursday, so what are Thursdays like for you? What do they look like?
Whoa, Thursday, gosh. So yeah, I mean, I've gone a bit of a transformation the last year. So I'm doing a lot of the gym these days. So I tend to try and do my workout in the morning, get it done. So actually, this morning I was up very bright and early. So 6 a.m. when the gym opened, and yeah, so I've got a workout in, and then I tend to do, have a look through markets, what we've got coming up. I kind of know that anyway. Whenever I do a webinar, I always say I've done this for years now, but I like to look at I like to call it the shape of the week. So even if you're a day trader, right, you should know what's coming on further down the week, at least.
Absolutely,
because,
absolutely.
Yeah. It affects the volatility, or right? It affects the volatility today, what might be coming up in 2-3 days' time. So, but I double check and have a run through. Obviously, I check up on what's gone overnight from with the markets. I have a few emails delivered that I really like, and to get me up to speed on anything I've been anticipating or waiting for. Have a quick look at the charts to see if anything's really developed. Through Asian time, it tends not to happen. And then, various projects, doing stuff with Trade Day, doing stuff with market charts, keeping an eye on the markets. And as we'll talk about a bit later, I'm sure, I'm not kind of actively day trading these days. So because I'm more swing trading, so holding positions, and then, looking for maybe opportunities, but most of the time I've lined those up already. I know where those may be coming. And then, obviously then monitoring positions and adjusting stops, targets, etc., as we go through the day.
You do sound like somebody who plans their levels way ahead. So do you have any kind of a process? You already said that you get some emails delivered and stuff. So do you look at things like Asian highs and lows? How did the Asian market move that day? Is it extra volatility, lower volatility? Does that come into your strategies at all?
Not hugely, no. I'd say no. I mean, I do check in what's, a lot of the time it's been, any major kind of developments really through, other markets that could be correlated with what I'm doing. So obviously, as we speak right now, for example, we have a lot going on the cryptocurrency side with the FTX and Binance storm that's going on. And that has definitely had an impact into markets. So it's kind of catching up on things like that, kind of fundamentals, macro fundamental. Now, I'm a technical analyst. We'll maybe get into that a little bit further down the line. And, my trading is done very from a technical standpoint. And I try to stay very, very pure to that standpoint, right? So, I'm making my decisions on what the chart is telling me, because that's what I do, and that's what I've been, doing for best part of 25 plus years now. But I must say there is always a backdrop to it, which is my fundamental kind of macroeconomic view, which I think sits back here somewhere in the brain. I don't know if it is down that back here physically in the brain, but for me, I always think of it being as a backdrop to my technical view. So I want to be informed as to what's going on fundamentally from a macroeconomic geopolitical perspective, because then, and again, this comes with experience, but then equally, this experience can be gained quite quickly if you do watch markets, on a very much on a daily basis, of being able to get a judge of how the market is positioned relative to the fundamentals. And I think that's really important. Is the market kind of got ahead of itself, ahead of the fundamentals? And as those fundamentals shift, does the chart, the price, the technicals, do they shift with it or not? And I do have this big thing that I have, which I called game changers. I mean, I think there are we have game changer events that are coupled with game changer price action, and then you usually get game changer technical signals as well. And a classic, it's basically a month to the day, because we've got US CPI day today when we're filming this. We've got it coming up in about 25 minutes. Mm-hmm. And we have the last CPI data release we had was one of those game changer events, because the market, it was a very negative number for, and when I say the market, I'm talking stock indices for stocks. Mm-hmm. It was very negative. It was more inflation than we'd anticipated. The knee-jerk initial reaction was lower. Mm-hmm. And then the market completely turned around, went massively higher on that day. I mean, I'm telling you, but you know this. But
yeah, we trade gold. Yeah, I'm a gold trader, and it was a crazy day.
It was a crazy day. Yeah, and, that told me we had big fundamental event. Everyone's obviously watching inflation, because we've had, in some parts of the planet, double-digit inflation. So inflation is super important where we are in the global scheme of things at the moment. On top of that, then you get a big behavioral shift. The market sells off as it should have done, and then rebounded and went massively back higher. So there's a behavioral, psychological sentiment shift, and then also the technicals played out as well. You get a big bullish candlestick.
Yes. So see, the way I look at it, because I also use supply and demand on larger time frames. It's a concept that's been kicking around for quite a long time, and it's basically a way to look at where the big sellers and big buyers have come from prior. So where the banks and institutions held their inventory, right?
Yeah.
And when that day came, I actually just saw it go to the nearest available demand from a larger time frame, and then it turned around. So it was almost like they were just selling off to find an area that is suitable to express their real macro view. So that's how I like to look at it. Macro analysis for me is about 30% of what I do. So yes, I'm a technical trader. Yes, I'm a day trader, and I'm pretty systematic with that, as much as a manual trader can be. But there are certain events, like you said, I call them super high risk events.
Right.
Very technical, because they cause these fundamental shifts between the relationships of the asset classes, and we must be aware of that. Whether you're a swing trader, even investors need to know that. And yes, day traders to a degree, we have very short-term positions. But that's not to say that when something like that is happening, you should be aware that people use gold as a protection from inflation. So what do you need to expect? You need to expect some longs to appear at some point. And if you don't know that, it puts you at a very big disadvantage, in my opinion.
Oh, hugely, yeah. I mean, you'd be. I mean, I remember what my mentor. So he was a great guy called Tom Hobson, who taught me technical analysis. Back at the turn of the century. He's sadly no longer with us, but he always used to say, and he was a pure technical analyst, and we were very pure, and he taught me to be very pure that way. But then, you don't lead with your chin. He used to say, right? You don't lead, so you don't go in like. You might get a technical signal 1 minute to go before payroll. You don't go on that technical signal. You have to be respectful of the fundamentals, the geopoliticals, the macroeconomics that's underpinning all of this. Even though you can stay very pure to your charting, etc. And you'd be foolish not to understand and have a good understanding, as you say, of what's going on. And as you say, those super high risk events, or for me, they're game changer events. They are huge. And even as you say, even as a day trader, what you don't want to be doing is, CPI data was really negative, I'm going to sell it. Then it bounces, I'm going to sell it. I'm going to, those are the days you get carried out on, right? Because you're forcing against this big shift that's going on, and you don't want to stand in the way of that.
Absolutely. You don't want to stand in front of an oncoming train.
No.
Now let's go all the way back to the beginning of your trading journey. How did you get interested in trading at all?
Yeah, well, I mean, it goes back a long way, actually, because I mean, most of the viewers won't have been born when I got into trading. So, and it's trading / investing, and I don't come from a super poor background, right? I've got to make that clear. But equally, things weren't easy when I was young. So I was born in 1970. So inflation was, when I was living, inflation was at these levels at some point. So that's interesting in itself. But Yes, I was born in 1970, and it was around the early 80s. I grew up in the East End of London, and very working class background. And I kind of people used to say to me when I was literally 10 or 11 years old, what do you want to be when you grow up? Right now, most 10, 11-year-old boys want to be an astronaut or a cowboy or something, right? I used to say, I want to be a millionaire. That's what I used to say at 10 years old. At 10 years old. Now I look back on it now, and I don't think that's good. I don't think that's good that that's what I said.
I'm not sure that it's not good, because you see, I never had that as a growing up. When I was 9, I decided I was going to be a musician. But have like the whole concept of money and how money is important to live well, especially in our material world, it didn't really hit me until many, many years later, right?
Right.
And to me, money was kind of just something that sort of came and went. I come from a pretty well-off background, I guess,
Right.
so maybe that's why it wasn't really the major focus. It was only when I went through some changes in my own life and when I started living in London as an adult, and I actually managed to lose all the cash that I had saved up from my music career, that I realized how important money is. So having that awareness so young, I think that's actually a really good thing.
Yeah, I swings and roundabouts. I mean, I will talk a bit further about various therapies that I've gone through, and I've looked back on that and what are the drivers.
And the reason why we're drinking coffee today, right?
Exactly the reason why we're drinking coffee today. So yeah, I've got I've got a fizzy drink in my mug.
You got a fizzy drink, very nice.
Yeah.
I'm actually breaking one of my rules not to have open cups around the desk, but these days I do have a number of keyboards. If I spill anything, I can just kind of switch them out very quickly.
So going back to the original question then, so at that young age, I almost had a plan of how I was going to do it, and one of the plans was I was going to save and save and save, and I was going to invest. This was at 10, 11, 12 years old. I can get 10% return from the stock market, and you were getting 10% returns back in the 70s, 80s, and get 10% return. In every 10 years you double every 7, 8 years you double your money. And I had like a plan at 10, 11, 12 years old, and then I acted on that. So in the early 80s, it was referred to selling off the crown jewels. So a little bit of history for the viewers is that the UK, basically most of a lot of the public amenities were owned by the public. They're owned by the government. So the likes of the gas, the electricity, the trains, the telecom, everything was owned by the government back then. And under Margaret Thatcher's administration, they sold them off over probably about a 5 to 8 year period, I'm guessing it was, through the early to mid 1980s. So what I did is I was too young. I was at 13, 14 at the time, but my family had no interest, had no idea of what owning a stock was. My parents never own stocks. They had probably a little bit of savings that was just in a building society or something, and so I'd been working about 3 or 4 jobs, paper round and that kind of stuff, and working in shops, and I'd saved some money up, and so I decided to put it to work, and that was my first kind of venture into, I was stagging the market. I was stagging like an IPO, which was the government selling off. And the first one I think I did was British Telecom or British Gas. I think the first one they came to market with, and multiple applications, which you were allowed to do under my parents' names, and my name and my sister's names as like proxies. They had to be proxies to ours. And
because you were what, 13, 14?
13, 12, 13, 14. So I organised all the paperwork, and you got the applications. You had to cut them out the newspapers. So you cut them out the newspapers, and you filled out the application. You send your check off, and then you got allocated a certain number of shares. And so I held them for once it went public. Held them from public, to private, and from private to public to public, really. And then sold them out and made, in most places, 20, 30, 40% profit. Because they all leapt, because they were all underpriced, so they made sure. Of
course, yeah.
So that was my introduction to stock markets, really.
That's amazing. Oh my God, that's very young. I mean, I didn't even get interested in trading until I was like 26, 27. Right. The way it was with me is I was doing an interview as a musician, and somebody actually asked me, what would you be if you weren't a musician? And honestly, music had been my life since I was 4, really.
Wow.
And I was a multi-instrumentalist. I was a session musician. I ended up having a master's degree in classical flute. Never used that because I went into like rock and pop. I was an alto saxophonist and an electric guitarist.
Oh, wow.
But yeah, so kind of like sold my soul to rock and pop, I guess. And then I was kind of thinking, well, what would I be if I wasn't a musician? And around about that time, there was like a lot of popularity about electronic trading coming to the retail investor and
Yeah.
stuff like that. There was like a lot of forex traders kicking about.
Yeah.
And I thought to myself, that looks interesting. It's kind of like a weird flex. It's like, well, if I can do that, I'm going to be doing something that a very small percentage of people are doing.
Sure.
So I had kind of a different drive, but it didn't really occurred to me that I should start learning how to do it properly until I was 27. So that's, pretty late.
Yeah.
Now,
Yeah.
talk to me about your journey into professional sort of investment banking world, because you were a broker. Is that right?
Yeah. So I basically, I say I grew up in the East End, and then we moved out to Essex, and a lot of people from that area do work in the city, and it was something that I always thought I would do, and was always going to gravitate towards. I also then, when I was about, I guess, took my options at like the age of 14, 15 to do well, back then they were O levels, they're GCSEs now. But when I did those, I chose economics and fell in love with it. I mean, absolutely. I mean, I always enjoyed school anyway. I was good at mathematics and just fell in love with economics. And then studied really hard through probably 16 through 17. And then managed to get a place at Oxford University, where then I went on to study politics, philosophy, and economics. So I came out of Oxford, and no one from my school had ever gone to Oxford or Cambridge before, so that was a first. And obviously, I mean, no one from my family had been to university before, let alone going to Oxford. So that was a massive leap for me, a big learning curve. And then I came out at 21, tried to get a job in various investment banks and didn't actually go that well, first of all. But then I managed to get a job with a broker on the Life floor, which is the London International Financial Futures Exchange, LIFFE, Life. And that was where people wear the brightly colored jackets. For the viewers who don't know, brightly colored jackets, all the shouting. If you've seen the film Trading Places, it's like that. And all the shouting and screaming. So it was a physical trading floor, a futures trading floor. And
because I interviewed James. You work with James Thorpe very closely.
Yeah.
He was one of those, and he was telling me about his wife, that she actually welcomed the electronic trading, because he said that she hated that environment. She was a bund trader, I think.
Yeah, that's right.
And she would be standing there. People would be like spitting in her hair and like pushing and stuff. Yeah. I don't think I would have been very good as a pit trader because I'm really tiny, and
I
my
don't
voice.
Know, yeah, but
yeah.
But small people can have a big, they tend to make themselves seen and heard, right?
Yeah, that's why I had like red hair for a long
I don't know. There were lots. It was very male dominated environment, but the ladies who were there, they weren't necessarily big, but they were forceful. Yeah, they were
really
forceful. Yeah, some of them were very, very successful. Very successful. Yeah. So.
Yeah, this is what I hear constantly from various people who were pit traders, that women generally were pretty good traders, because naturally we have like a risk averse nature, which strangely doesn't really apply to me. I was actually a pretty aggressive trader when I started. Right. But the only pit that I saw was the LME exchange, London Metal Exchange.
Yep.
And that was very civilized by the time that I went in there. And it was like everybody just, sitting in the circle. There's no shouting. Everyone's like super civilized, and they're just kind of like, doing their signals and stuff. So it's like, is that it? It's not like the movies.
No. I tell you what, I went to the LME once, and I couldn't believe there was like 8 people sitting around a circle, right, just agreeing on the prices.
Yeah.
I mean, the Life floor was like, the Bund pit at one point must have had, 200 people in it, right? I mean, and literally, you couldn't hear yourself think, when it was, non-farm payroll day, at the peak, it was just like being in a football stadium. So, an incredible atmosphere, an incredible experience, somewhere amazing to work. But, by the time I hit 30, I was ready to. It moved on to electronic trading, and I was ready to leave. Yeah, it was definitely a young man's game.
Yeah. Right. So the focus of this interview today is obviously your trading journey. How did you start? What sort of kind of strategies you're using, your approach. But there's always a big behavioral aspect to each trader's story. And with your journey, even more so. When I interviewed you guys for the first time, you were very open about the fact that you're a recovering alcoholic.
Yeah.
So can you share a little bit about that? Because going through that kind of an experience, it must have given you an insight into addictive personalities and to maybe understand addiction a lot better. And, with trading, especially prop trading, people get addicted to resets.
Yeah.
They keep kind of coming back and reset after reset. You must see a lot of that. So can you maybe share a little bit of your journey and any parallels that you were able to use as a coping mechanism that can be transferred to trading activities as well?
Yeah, of course. So I mean, I am a recovering alcoholic. So it's coming up to be 15 years as we in next April, which is quite a milestone. At the depths, it was of my alcoholism, it was awful. And I am blessed to be a long way from that these days. But what part of that journey was, and I don't blame the fact that I went into the city. We've spoken about this before.
It must have not been easy, because I don't know how much people know about the city if you haven't actually worked there. So just to share a little bit with the viewers, everybody gets trashed in the city. Like that's like almost a culture thing. Yeah. Every Thursday, every Friday, sometimes even on Wednesdays, we would like get beers out in the office and everything. And it would just quickly spiral. We had people who would stay in the office throughout the entire night doing God knows what, not just drinking. And it got a little bit crazy. Yeah. So I actually don't have an addictive personality. So while it was a little bit detrimental to parts of my well-being, I never actually went down the route of being an alcoholic, luckily. But I can't imagine that sort of environment did you any good, especially if you had that addictive side to you.
No, exactly. Yeah. So I see myself as an alcoholic and addict no matter what. Right. So, and I've traced that now back, and we'll talk about that shortly, back to, to a very young age, and whether it's even inbuilt into us to some extent on a genetic basis. But what I do know is that atmosphere, as you say, that environment fuels it. And there's other alcoholics and addicts in that atmosphere and in that environment that are going to then feed off each other, and we all fed off each other. So, so that was part of the journey. But things got worse for me. But at the end of the day, I went into an institution. I got better. I went down the AA route, so Alcoholics Anonymous, and had an awakening through that process, which I am eternally grateful for all the people that helped me through that really difficult period, particularly my wife and my children. My children were very young, fortunately, at the time, but and I came out the other side, and I was very skeptical about anything to do with kind of psychological aspects and counseling and therapy. I mean, for me, it was a complete nonsense. And then I went through the process. I was amazed at it, to the point of coming out the other side. Within 6 to 9 months, I was on a counseling course. And then I did that for the next 2, 3, 4 years. And then in I think 2011, 2012, having gone into the rehab in 2008, by 2011, 12, I was fully qualified counselor, and still am a qualified counselor, psychotherapist. So I still now do some counseling psychotherapy, mostly on a voluntary basis, because I don't have full time to give to that. You do need to give full time to that if you're going to do it properly. So I do it mostly on a voluntary basis. And and as I say, as you kind of implied in your question, there's been loads of insights. I mean, I've cross addicted onto other stuff as well. And I have to be very careful. I mean, I through COVID and before COVID, my weight, sugar has been a massive thing for me over the years. I mean, I've lost in the last 18 months, I've lost 50 kilos. So that's like 7.5 stone. And I can send you a photo. Maybe you can share the photo.
It's a bit difficult to believe, seeing how slim you are now.
Yeah, 50 kilos, and now I do the gym a lot, and I've got to be careful I'm not addicted to that. But trading / investing / gambling is dangerous for me as well. And I have got to the point through, so I didn't really trade and invest for myself. I mean, more invest, yes, invest, but we weren't able to trade when I was at the banks. For, you know, you were very kind of, you couldn't be in and out.
Yeah. So for the viewers, when you work for a financial institution of that sort, you're just not allowed to trade because it will be considered insider trading. Even if you're not talking to anyone, it's still insider trading.
Yeah. There are so many rules and barriers around it. It's not even worth trying. I mean, it is for those insider trading. And, you know, I was a research analyst by this point. Through the early part of the century, you know, I segued into being a technical analyst. So I was in research departments. You know, I was 15 years in total, Merrill Lynch, Bank of America. Then I was 3 years a director at Credit Suisse. And, you know, you have potential influence on the market. So, you know, you're publishing reports into a big institution, via a big institution, on your view on the market. So you can't really be taking positions, right? Even if it's in asset classes. You know, I didn't used to write on individual stocks, but, you know, you had to be careful. You couldn't be trading in and out. You can hold individual stocks, obviously, but a lot of stuff has to be signed off. So we weren't trading. It was more, you know, long-term trade /
kind of like portfolio. Yeah.
Okay. And so it wasn't till then I left that world in 2012 after I left Credit Suisse, and then I set up Market Chartist, that I was able to be more flexible and trade. And initially I was swing trading, and that was going quite well. And then I went through, about 4 or 5 years ago, a very dangerous time of becoming a day trader, and to the point where, you know, it was pushing my kind of day duties out of the way, which were, you know, not only husband and father, but then it also, you know, what I was doing with Market Chartist. You know, I was just about getting my reports done, and the thing that the business that I built over like 5-6 years, you know, was not fully suffering, but was nearly suffering from the fact that I was fully engrossed in the markets. And you kind of have to be as a day trader, but not to the point where it takes over. And I was at that point at some times, and I had to address that again.
So what do you think that was like your addictive personality just replacing one vice with another vice? So suddenly going from alcohol to overtrading.
Overtrading and sugar and food has been an issue, you know. So, you know, there's, you know, what have you got to be addicted to? Well, you know, what have you got, you know, kind of thing. For me, it's like, you know, what's out there, you know, if I could
what
breathe,
else can I have?
Exactly. If I could breathe any more deeply, I'd breathe more deeply and get the free air in, right? Sort of thing. So,
see, interesting for me, sugar is also a trigger. Like I say I don't have an addictive personality, but one thing that for me, it's not sugar necessarily, it is carbohydrates. For example, I have to be on keto. It's the same thing. It converts into sugar in your body. And I cannot, like, if I decide to get off keto, because I'm keto constantly because of that, because I don't have an off switch. I just, when I start on a carb up, it's not pretty. It's like, can I have bread? And then it's not just a little bit of bread, it's like the entire baguette. And then it's cakes. And then I don't even like cakes normally. It's like, what am I doing? So I totally get it from that point of view. I had to literally just cut out all sugars, all carbs, just to not get that trigger. And I think it's very helpful to know where your triggers are, even in trading. So is it a losing trade? So I bet you see a lot of that because you do... as a part of the trade day mentoring on the advanced program that you guys do, you offer a mentoring call, right? And you're a qualified counselor. So basically when they come to do the mentoring with you and James, they get effectively a therapy session.
Effectively. And you know what? It's been no shock to me that, you know, when we have these mentoring sessions, you know, most of the time, you know, technical analysis is my thing, right? That's my market thing anyway. And as much as we talk about, you know, some macroeconomic stuff and we talk about technicals, I try not to mess with anyone's strategy. You know, that there's so many different ways to trade. You know, it's like a game of chess, right? There's no right or wrong, as long as it works for you. And we're all different, so it should work differently for different people. And they're going to use different indicators. They're going to use different, you know, their risk rewards, their hit rates, all the rest of it. It's like it's a whole the whole ball of wax kind of stuff. And it's how it all you know, conglomerates. So messing, and I don't want to come in and mess around with too much of that, right? So, but we do talk about risk management, but risk management inevitably leads to all the psychological, emotional, behavioral stuff. And, it's amazing, nearly every call that I have with our traders at trade day on the advanced call, and it's not just actually, I'll just mention this as well. We do try to, even the guys who come on the beginner course, those that have become funded, and I don't know if James mentioned this in the interview, but those that become funded, there's a massive drop off from that. And we've spoken about this as well, right? The drop off from being on a sim to a funded account of performance. And we offer a call to even the guys on our beginner program who get funded.
So all funded traders, interesting. I didn't know that.
Yeah, we offer them a call to say, you know what, this is going to be a hard transition. The stats prove that it is a hard transition. And we try to give them, and again, it's some pointers around risk management. It's pointers around behavioral stuff of you don't need to be swinging for the fence. It sounds quite basic stuff, but it's amazing how many mistakes continue to be made.
Yeah, but that's the whole point of therapy, isn't it? It's like everything is pretty obvious, but until somebody actually tells you, hey, this is how it is, or maybe look for the childhood traumas that might be affecting you, and suddenly you're like, oh my God, you're right. And you have this like almost like an epiphany moment, because I had a big loss at one point in my career, and I didn't realize I had this sense of inadequacy that stemmed from nothing more than my mom and dad telling me, oh, you're not as good as your sister. But my sister is actually 10 years my senior. So, of course, when I was 3, I would be terrible at certain things, and she would be 13. Of course, she's better than me. But they didn't know that that's what they were doing, it wasn't like anything, oh, we're going to be mean to our younger daughter. It wasn't anything like that. It was just like a throw-off comment that they didn't think anything of. And now that I actually went to see my mom not too long ago, and I said that to her. I said, I discovered I have a sense of inadequacy, and it was because you and Dad kept telling me that I suck at things when I was little. And she was like, oh my God, I'm so sorry. And I was like, it's okay. You didn't know.
You know what? That is an amazing example. That's a really good example, right, of how you don't need, it doesn't have to be this kind of abusive background that any of us come from, and so mine is exactly the same. It's nothing to do with what my parents did or didn't do. It can be 2 or 3 little things that at a young age we on board and take on board, and we process and we store away. It defines our synapses. It defines who we are. In counseling, it's called like your life script, and you can run a life script from these. There could be 2 or 3 events that we link up at quite a young age that they're not kind of, as you say, your mother didn't mean anything by that. And if at 3, 4, 5 years old, you can't comprehend, well, clearly I'm not going to be as good as my 10-year older sister. All we hear is that at that age is, you're not good enough.
You're not good enough.
And then we run with that life script of we're not good enough. My parents don't think I'm good enough. Where all they're actually probably saying is, oh, look, isn't your sister 10 years older and much better? But that can just change our course. And then, as you say, can still be impacting us 10, 20, 30, 40, 50, 60, 70 years later. It's amazing how it works.
And if you don't deal with it, it stays with you. And I probably never would have dealt with that if I didn't have the big loss. And the whole point of my loss was that I wouldn't let go of the position. And one thought that kept running through my head, it's like, I have to prove my parents that I can do this. Because everybody was a bit skeptical of me going from music to trading. And I wasn't terribly good at maths, even though later on it turned out I just wasn't interested in it because it didn't have any application. And that actually I'm pretty good at maths when there's like some kind of a real cause to do maths. Then I'm excellent, like accountancy. I'm actually smashing that. But back then obviously I was just like looking at an equation and going, this is boring. Why am I learning this? And it was that thought in my head that my parents think I'm not good enough. I think that led to my drive and the ambition that I have, and that I have to be the best at this and that, and I have to play not just one instrument but 4 instruments. If I was doing gymnastics when I was like 9 years old, I'm like, well, I'm not just going to do gymnastics. I have to be in that Olympic team, which I managed to do. But then the country fell apart because I'm from Yugoslavia. Long story. all the funding went and stuff. So there was no
gosh.
Olympics. Yeah. And then I kind of went into music, and again, I have an obsessive nature, which is maybe addiction. I don't know. It could be. But yeah, then I went into music, and I got equally addicted to that for many, many years until I found trading. So I say I don't have an addictive personality, but you're actually making me question that now. I say, I'm not addicted to substances, but am I addicted to other things?
Yeah. So I mean, some of this stuff can be very healthy stuff. A lot of that you've said is can be healthy kind of addictions, but then equally, even the most healthy, if you're, I can be addicted to the gym. If I'm going 6 hours a day and not spending time with my family or doing, spending time doing stuff with my, my corporate responsibilities, then that's having a negative impact, even though it's kind of seen as a positive thing. So yeah, we do all have to be careful, I think. And, I'm not going to say yes or no regarding yourself, but, maybe there is something in there as well, kind of stuff, So, but the thing is, as you say, it's a matter of, that, right? You kind of have an understanding of these drivers, and that's the first thing is to realize they're there, right? And to acknowledge them, step out of denial. That's kind of the first step in any kind of recovery from addiction, to move away from a denial position, admit there's a problem, and then that you have the ability, or we have the ability to solve that problem ourselves with help, right? And that's what comes up a lot in trading. And you said about triggers, right? So one thing, as and you kind of touched on it there with regarding to this internal critic that we have of, and it comes maybe from parent, it could become from friends or peers, but we have this internalized critic. You're not good enough, you're always going to fail, don't try, because if you do try too hard, it's not gonna get you anywhere. And a lot of us have that. And then one way of overcoming that is to also have that internal nurturing parent, right? So to almost go to that, so that's something I try to say to people, right, is try and summon up this happy place, right? So when you're in those kind of negatives, so if you can get to that happy place. And what it might mean is, and I'm a big believer in this, I mean, it might seem the most simple, but we need a reminder, we need a trigger, right? And whether that's a post-it note, get a bigger screen, get post-it notes, around your screen, and have those sticky notes. What I have here on the side? Oh, look, you've got your tab. This one is laminated. I don't know if that's
right.
So that said, it could be backwards.
It's shiny.
Yeah,
it's shiny.
Yeah,
it's not shiny. Really...
It says, "Thy will be done." Right now, I'm not religious. Right, I'm not. I must stress. I'm going to put it back because I don't want to lose that, because it's important to me. But I'm not religious. Okay, but what "Thy will be done" says to me, and I've got it right there, is that I am not in full control of everything. A very controlling personality, right? So I think I can control the markets at times, right? So for me, "Thy will be done" says that I don't have control, that there is control that is external to me. There are events, loads of events external to me. All I can control is my decisions. What I can control is when I click to buy and click to sell, click to exit, click to take a loss, click to take a profit, move the stop, move the target. I can decide all of those things. I can't decide where the market is actually going to go, and I don't have the control over that. And that can be a massive leveler of don't fight what you can't control. Take responsibility and ownership of what you can control.
Yeah, great example of that. Again, I do a lot of gold trading and crude oil trading because I'm mainly a commodities trader. And the other day we had a pretty big move in gold. Now, I do coaching as well as a part of my Market Stalkers Pro development program. So there were a lot of people who went in on that move, and they got like 2R multiples, which is, what we aim for on most days. Yeah. And at the moment we have the US elections weighing on everything, and then we have the interest rates, the high inflation, whole bunch of stuff that is causing a little bit more volatility in gold. So quite a few people went into that, got their 2R, and then the market just shot up. Yeah, and a couple of them were like, "Oh my God, look at what we left on the table," and blah, blah, blah. Then one other guy was like, 2R, I just took 2R. It's killing me.
Yeah.
So I actually had to to switch the way their mindset is working. So I said, but why are you crying over the fact that you didn't stay in? This is an event that might happen once every 4 years. And even then, it might not be a long. It could be a short, depends on the market conditions in 4 years' time. Why are you focusing on the fact that, oh, I left money on the table, and not focusing on the fact that you identified a good setup and that you got your full target? Like, that's what you wanted. Your job is done. So in one of the other, one of my colleagues, Rod Casilli, I'm sure you guys know him. I think you did an interview with him. So we sometimes do a lot of collaborations. So I go into his trading room. He comes onto my channel and stuff like that. And at one point in his trading room, one guy said, well, actually, I'm learning the art of JOMO rather than the art of FOMO. So it's like, what's JOMO? And he said, well, joy of missing out. And I think that's such a great, I absolutely love that. So that's what I said to the guy who was like, oh, 2 hours, absolutely killing me. And I said, you have to learn the art of JOMO, joy of missing out. You're fine. You did your work. You got your trade. Enjoy it.
Exactly. That's good. I like that. Yeah, definitely. I'm going to use that. I'm going to
definitely. I think it's spreading now.
We'll get it. Hashtag JOMO.
Hashtag JOMO.
Exactly. So I mean, and it's things like that. It's exactly things like that I try and work on traders, try and work on myself as well. By stepping back from the day trading, when I did have, I went into the day trading, I had some amazingly positively profitable experiences, but ultimately they were very negative. Even the profitable ones were negative from an emotional psychological basis, because I handled it so badly, and then they turned into the inevitable losses. I had to step back and say, again, went through a whole level of counseling for that. Identified that the trading wasn't trading at that point, it was gambling, because it wasn't so much that I couldn't analyze. It wasn't the randomness. It wasn't like gambling as in that I couldn't analyze. My analysis was amazing. It was all the behaviors around it. It was the behaviors around it. It was the addictive side to it. It was the fact that I couldn't stop when I should be stopping. It was the fact that all those, as the losses came, couldn't take the losses and were chasing the losses, all that side of it.
So let's touch upon like some of your biggest winning days and biggest losing days, because I think that's very useful for traders who are still on their own journey. And obviously I spoke to James about his 2 big kind of defining moments of his career, and both of those events, the biggest day and the biggest losing day, biggest winning day and the biggest losing day, both had a somewhat of a negative and positive aftermath. So it sounds like you had something similar, but to a massively overblown degree. So what would happen when you have a really good day? Like when you had your biggest day, did that send you into wanting to trade more? Did you give it all back by the end of the week or something? Or how did you learn?
That's basically what happened. I mean, I couldn't get it wrong for 5 days on the bounce. And I'm not talking about 5 trades. These were multiple trades within the day, hardly booking a loser. So maybe I was on a 20, 30, 40 trade winning streak with maybe 1 or 2 little losses in there. And they were all good multiples. The account grew exponentially from, I just threw in we're talking a few hundred, like £1,000 or something. And I turned it into, a huge amount of money in 5 days. Very leveraged, lots of trades, in and out, both sides of the market, long, short, nearly all trading on the Dow. And just, got to the point where I was trying to stay very level with it all, but I was trading, probably 10, 12 hours a day, which is probably almost certainly too much. It's too much because you start getting tired, you lose focus. And then ran it up to, over 4 or 5 days, turned the account into something huge, life-changing money. Life-changing money. And it was all gone and more in 24 hours. And I've seen the study on this. I can't remember the name of the study. But there's a study on the feeling of euphoria comparing to a profit particularly
Oh
compared to the
yes, I
feeling.
remember that when I went through my apprenticeship, they
Yeah,
actually mentioned that study, and that
yeah,
the more that you lose, the money that you loses value. The more you lose.
yeah,
So
yeah,
if you've lost like 10 grand, well, what's another grand? And then if you've
yeah,
lost
yeah.
1 million, it's like, well, what's another 2 million?
Yeah, yeah, yeah. And there's all those
Interesting.
psychological aspects of that, the house money effect. So the house money effect, feeling it's not your money, even though it's in your account, it's there. You still feel that it's their money. I don't know if you know the tale of the saga of the man in the green, the man in the green dressing gown. Have you heard of that?
No, I
Oh, I'll do
haven't.
it really quickly, but it's basically it talks about the house money effect. It's a guy. So the guy, the man in the green bathrobe, and I don't know whether it's based on true, but it's always told as the man in the green bathrobe if you Google it. And effectively, what it is the guy's in his hotel room in Vegas, and he has the green bathrobe on. So whichever hotel he was at, I don't know. And he decides to go. He says to his wife, "Oh, I'm just going to get some ice." So he goes down to the corridor, and the ice machine's broken. So he goes down in the lift, and he goes onto the casino floor, and he goes to the bar. And as he goes to the bar to get some ice, he puts his hand in his pocket, and there's a chip there's a $50 chip. And he goes, "Oh, I'll have a quick gamble." So he gambles. He puts $50 on, and he puts it on black or red. It's roulette, and he makes it up to like $1,000,000, and then he spins it again, and he loses it all. And he goes back to the bar, and he gets the ice, and he goes back to the room, and his wife says, "Oh, you've been a long time. What took you so long getting the ice?" Oh, he said, "Oh, I had a quick gamble down on the casino floor." And she said, "Oh, what did you lose?" And he says, "Oh, $50." So the whole thing there is a house money effect, because he never takes that million that was sat on the table, that's still the house's money. He
Yeah.
never sees it as his money. He never appropriates it into his like bank account, into his own personal wealth. It's still their money. So I haven't really lost anything. So, I was doing exactly that, having taught people not to do that. I was doing exactly that. I didn't appropriate that money in as my own. And yeah, there was a whole thing around. I talk about to the traders a lot about HALT, HALT, and I think this comes from the addiction world. So that's hungry, angry, lonely, tired. HALT, halt. So if you're feeling either hungry, angry, lonely, or tired, you should halt doing what you're doing. So if that comes from addiction, you should stop and make sure that you're not in a point of relapsing from the addiction side. But from trading side, if you're feeling any of those, well, I was certainly over trading. I was tired. I wasn't eating properly. As it all started to get wrong, I was getting angry with myself. And trading can be the loneliest place in the world. So,
Yeah.
all of those things, So, that's going from, that's the culmination of my best experiences and most profitable, but in some ways they were awful as well. The experience of making the money wasn't great in a lot of ways. I never felt, and I was going back to that euphoria. The study shows that feeling of euphoria is like 10% of the feeling of loss, of losing. The actual feeling, they've measured it somehow. I don't know how they measure the depth of feelings, but this study basically,
I think it's MRI and stuff. You can see
maybe
bits of brain lighting up and stuff.
You never get the real euphoria. I never celebrated and felt the euphoria from making all that profit and having all those winning trades and doing so well, compared to the depths of what I felt having lost it were 10, 20, 50 fold. The feeling was just, awful, to the point of, I would say, and I've addressed this in my life, almost like very self-destructive, suicidal thoughts and feelings. To that point, not that I was ever going to act on that, but those feelings were there. And that was just another wake-up call to my whole journey, unfortunately. I look back on it now, not with happiness or joy that I went through that, but that has put me on another path. It's put me on yet another path of which now I know what I can't do, right? And now I know I can't do that. So now what I do is I swing trade and swing trade successfully. You can't make as much swing trading, because there's not as many opportunities over that time frame as there are in out when you're day trading or scalping or whatever you're doing.
Yeah, but at the same time, if you know that you don't have that kind of control and that there are triggers, there's something that triggers you, then it's better to just stay away from it. And you've worked,
Oh, 100%.
Yeah, and you found something that works for you. You don't
Yeah.
need to outperform the market like a million times a day.
No.
If swing trading is something where you found yourself, that's right for you. Like you said
Yeah.
before, there's so many different styles of trading. What works for one person might not necessarily work for another. And I see that in my mentoring as well. Like there
Yeah.
are certain people that are either way too risk averse, and I'm always like, well, you're never in a trade. Like, what's going on? Or the other side, where I call them the grasshoppers, that they're just in and out, in and out. Let's add another product. And it doesn't matter how many times I say, hey, don't add another product. You still haven't mastered the one that we were agreed on. You're still a
Yeah.
mess because you can't. I say 3 trades per day. He does 15.
Yeah.
And then he adds another 2, and that turns into 20 trades, 30 trades, 40 trades. It's like, how many trades do you need to do to
Yeah.
realize that this is something else? This is not
Yeah.
trading anymore.
Yeah.
This
Yeah.
is an animal part of you or an addictive part of you taking over, turning yourself into a grasshopper. Because I
Yeah.
think that's such a good analogy. You're just ding,
Yeah. Yeah.
ding, ding, like
Jump,
jumping
jump,
in.
jump. Yeah.
Yeah, and until both sides of the personalities realize what their triggers are, either
Yeah.
not being in trades or being in too many trades,
Yeah.
any kind of technical analysis and whatever we can bring to the table from that side is kind of pointless. It's
Yeah.
like,
Yeah.
they know how to trade. Like you said, I knew my levels, I knew the skills were there, but you just couldn't stop yourself.
Yeah, yeah, 100%,
Yeah.
100%. Yeah. I mean, I think what's really useful with these talks you're doing and these interviews, and if you go and speak to anyone, I mean, I was really lucky enough. I've interviewed, his name escapes me, Jack Schwager. So Jack Schwager, who wrote Market Wizards. Yeah.
Yeah.
The Jack Schwager, I was, fortunate enough to badger him, and he agreed to give me an interview about a couple of years ago. And I've interviewed him. If you go to, I've got a site called fxexplained.co.uk. If you go there, you'll see the interview with myself and Jack Schwager. And, his books is obviously all talking interviews with the most successful traders in the world.
Yeah, I love his books. I was obsessed with yeah, absolutely obsessed. I remember reading about it because they gave us one of the tasks to read the books, and I was like, Market Wizards, oh my god! And I was like, this is so amazing. But I could also see parallels in the people that were in the prop trading company where I was at. Very interesting people. One guy was coming from a professional NFL player or something, and went into trading. And then all of that, I was like, oh my god, this is such a cool world. And I absolutely love his books. I'm such a fan.
So me too. And I managed to interview him, and I asked him the question. I was in the interview there of what stands out, of a trait amongst all the traders, and he basically said, that the fact is that they've all got we all think that they're these super traders, that these amazing, that they're superhuman, but he reflected they all have their own frailties, their own indecisive nature, or they have their own issues. But most of them, what they do have is the common thing amongst them is that they are able to kind of analyze situations. They are managed to be a little bit divorced from those situations. So they are basically becoming less emotional, less ingrained into what they're doing, and a little bit more detached from it than I think a lot of us mere mortal traders are able to do, and I think that's one of the main takeaways that he said they are able. Their risk management is very it's up there, almost above. It almost does. They've done a study as well, and I'll mention this. They've done a study where they gave successful traders like random positions. So they don't even, they don't get to choose whether they're long or short, right? So they give them random positions, maybe across like 10 different markets, and then they basically just trade their way out of it. And they end up turning that portfolio into a profit. And that's got nothing to do with market. They don't get to decide whether they're long or short, right? But they still end up making money.
It's a skill. If that doesn't tell you that trading is a skill, nothing will.
It's all about the risk management, because it's not being long or short. It's how you get out of the being long or short. It's the decisions you make after you're in the trade, where I think we naturally focus on all the decision is made before. You make your money by deciding whether to be long or short in the right level, where that shows you that it's once you're long or short, regardless of whatever level, it's then about what you do with it after that, right? And
trade management.
Exactly, and that's what and Jack Schwager's basically said that they're very detached from the emotions, so their risk management is super good. These people, they're either in or they're out. They're either all in or they're all out. And my experience has been that the successful people that I've seen and worked with, that these people are very, very analytical. They can take in a lot of information and process it. But what they have is, and you spoke about that, that person who can't take any risk, right? And that person who can't stop taking too much risk. And what these successful traders, I think, have is they can do both within the same person. And that's what you said about trying to bring them together. What they are, and you see the quotes from these, people like Tudor Jones or Soros, and what they kind of say is they're massively risk averse. Generally, they're very risk averse. Their main thing is, end the day where I started the day. Don't be down on the day. Don't lose money. Hold on to what you have. But when they see an opportunity, they're almost all in. They go for it, and they take. I think there's a great quote of, I don't worry about making or losing money. I can't remember who this is from. I just wait till I see the money sitting in the corner and just go and pick it up. Basically, you get those up when you see the proper opportunities. Where I think, for many retail traders, for many semi-pro, semi-am, whatever you want to call the sphere that we kind of are involved in, people think they have to be in something all the time to be able to make money. You constantly have to be in a trade. You constantly have to be, if you're not in, you're going to miss out. We've spoken already about that FOMO. And you think that everyone else is constantly because you see they're in Reddit chats, or they're in Discord group, and all they're seeing is people post. No one's going in there paying, I lost all this money today. Everyone's posting
you never hear about the losers.
So I think so these great traders, I think, have got that they can marry up those two sides that we've been talking about. We've been talking about, obviously, my addiction, my alcoholism, and that's an extreme, one extreme. But what it allows me to do, and this is like, going back to this weight loss that I've gone through, I've spoken to people about that more recently, and people are like, everyone, how do you manage to lose that much weight? Tell me what your secret is. And I said, well, you know what? I'm kind of blessed. I'm lucky that being an alcoholic and addict means that it's a double-edged sword. As much as it can be all that negativity, for me, it's like flicking a switch. And when I decided I was going to lose weight, my calorie intake went from thousands a day of, you wouldn't believe how many carbs I was getting into my mouth, to 700 or 800 calories a day, purely protein. And I ate that for 6 months and dropped, 6 stone. That's 40 kilos in 6 months, and now 50 kilos. And because I can flick that switch. Now, I appreciate most people can't do that. And most people cannot do that because they don't have that addictive nature that allows them to do as much as I can go to the depths, I can rise from those depths equally as quickly, and addicts can do that. So in some ways, I'm kind of blessed that we can, we're blessed that we can reverse out of that position, but then, it's not maybe as easy for everyone else. And that kind of comes back into that being able to identify where your strengths are, identify where the weaknesses are, and then find that somewhere maybe in the middle. Where
it's also about the process as well. So you mentioned your weight loss. Like, I went through something different because I'm actually heavily into fitness. I went through some health issues this year, but I'm actually a fitness champion for several bodybuilding federations.
Wow.
So again, so actually going back to my addictive personalities, I got into bodybuilding as well because I wanted to better my health, but D doesn't do anything halfway. So of course I had to.
I'm just going to interrupt you to say, I think this call was meant to be about me. I think we're learning more about you today, right?
But you see, this is the thing. You talk to somebody who's like yourself. You've gone through the addictive personalities, and suddenly I'm recognizing some of those behaviors in me, even though I was never addicted to alcohol. But clearly, I must have been addicted to a whole bunch of other stuff. And for me, it was very easy to get up, go do like 3 hours at the gym every single day. And obviously, I'm in a position where I can do that, and I have that kind of time. And I, like yourself, I can appreciate that not everybody can do that. But at the same time, you can draw a parallel between that kind of a process where you have good habits, good eating habits, good exercising habits, and you do that day in, day out. Yeah. And after a while, actually pretty quickly you start seeing results, long-term results. And I think in trading is the same way. Once you have that good process, once you put all of your habits in place, you effectively start getting positive returns. You make a change in your trading performance, right? So I actually use that analogy quite a lot. It's like, well, if you're gonna eat crap, like, all day long, just shoving crisps down your gob, and then expect that you're going to look excellent, even if you do a lot of exercise, it's not going to make that much difference, because everything is an equation. You have the diet, you have the exercise, calories in, calories out, yes, but also total energy expenditure that comes into that whole process. And similarly, on the trading side, we have risk management, psychology, and a solid method. So all one without the other two, it won't work, right? You have to have a process in place. So if people can find themselves psychologically in that middle, like you said, where they can kind of go either be aggressive when the right opportunity is there, or just stay out of the markets when the whole thing is not quite lining up, when the market is not moving. As you said, we can't control how much or how long or the move is going to carry on for, and you have to recognize that. So putting all of that together, I think that's the big secret of trading successfully.
Yeah. As you say, it's no real secret. It's fairly basic, but once you're in the midst of it, you've got that hungry, angry, lonely, tired. It's a lonely place trading. If you're just sitting there as a desk trader on your own at home, that you can get wrapped up in your own head. I've just got a couple of quotes I'd like to say. A couple of quotes actually from, let's face it, one of them, clearly the most intelligent people that's ever lived, Albert Einstein. It's a couple of quotes that I love. So one of them is, he said, no problem can be solved. I'm paraphrasing this a little bit. No problem can be solved from the same level of consciousness that created it. And all that means is, if you want to solve a problem, you got to raise your consciousness. And consciousness is just your awareness. You need to raise your awareness above the level of the problem that you have, right? So, and we can do that, right, through self-awareness, through a bit of introspection, through talking to other people, from a bit of wisdom and knowledge, applying the knowledge, wisdom over time, kind of stuff. So that's one quote. And the other one is also from Albert Einstein. And he said the definition of insanity is doing the same thing again and expecting different results. And we see that all the time with our traders. I've done it myself. I'm not pointing the fingers at our traders. I've done it myself. You do the same thing over and over again. I drank excessively the same thing every single day for decades, and I got the same result, right? I stopped doing that. I changed that behavior and I got a different result, right? So, two great quotes from obviously one of the most intelligent people there's ever. So I think we should listen to him, right?
Absolutely. Steve, I know that you've got to run. I know that you've got other things to do today. So I'm going to do the sign off now. Thanks so much for doing this interview. I really, really appreciate it. So hang around so we can maybe just catch up after the filming. Now, I want to say to our viewers, if you are interested in scaling your trading capital without risking your savings, you may want to check out the video that I did with both James and Steve a while back when we were introducing their prop firm Trade Day. I'm going to put a link somewhere here so you can check that out. And I'm also going to remind our viewers to like this video and to comment below, because all of that really massively helps us for the YouTube algorithm. And of course, if you're not subscribed to the channel, make sure you subscribe. Thank you for watching. Thank you, Steve, and we'll see you next time.